Hello, can you guys hear? Okay, testing again. Can you guys hear? If you can hear, then just type under the chat. Just type yes, so I know you guys are here. Then we are good to go. Okay. Okay. Again, similar to every week, when we do this, we'll record the whole session. So for those who miss out, don't worry because you can always refer back to the recordings. Okay. So let's go to the report first, all right? So every week, what I want you to go through is look at this report first. But the first thing you want to look out is not at the technical analysis component, all right? But go towards this part, all right? We added in the fundamental strength index. I think Z, Jess, and John would be a little bit familiar with this table, all right? Because we covered this on our Saturday fundamental and sentiment workshop. So what we want to share with you is we'll be including this table into the weekly report starting this week already. So the whole idea is this table gives you a quick glance into how each of the economy is performing. Right. So I want to walk you through some of the things. All right. For example, if you look at this 9 July, all right, the verdict here is it's 34% weak. All right, but I don't want you to just focus on this. I want you to focus on the weekly change, which is the past 7 days. Has it improved or deproved? Right? Has it improved or dropped? Right? Then you also want to look into the monthly change. That means for the past 30 days, have it improved or has it dropped? And then you look finally at the quarterly change, which is 90 days. In the past 90 days, has the economic data in Australia improved or dropped? All right. So if you look at this, right, overall for the past 90 days, that means from today you count back the past 90 days, the economy data coming out from Australia has actually improved by 5.9 points. All right. And of course, if you look at the most recent 7 days, which is the past week, it improved by 1.43 point. All right. So overall, what you're seeing over here is generally the economic data of Australia has been improving. Okay, this information that you see on this table is everything regarding economic data only, right? So this doesn't take into account sentiment, right? It's simply based on the economic data coming out. Economic data includes economic indicators like GDP, your employment rate, your CPI, your manufacturing, production, etc. All right, so it's very objective. It just calculates the economic indicators. Okay, so you look at New Zealand, it's also all positive, right? But Canadian overall, the past month was positive by 10 points, but last week it dropped a little bit. All right, so it is this amount, this 0.07 points drop is very insignificant. Okay, because it's very close to zero, so it's almost like neutral for the past 7 days. The past week is almost neutral. Okay, we also track China data, so you can see China economy is also improving for the past week as well as the past quarter. All right, but Japan, you can see it's always improving. So that's why we always say the economy, the fundamental economy of Japan is still very weak. All right, you can see over here as well. US, all right, you can see that last week, all right, because of NFP jump very high, all right, that's why you see a positive +8 points over here. All right, but what you want to take note is this one again, I want to emphasize is only economic indicator, all right? So you also need, when you trade and you have a bias, a direction bias, you want to also have sentiment analysis as part of it, all right? So this one is just one component, which is the economic indicator, the fundamental aspect only. All right, Euro, you can see that the economy is also growing, all right? This shows that Draghi, QE, as well as the negative rates in the Eurozone is actually starting to see improvement already. All right, and for pound, you can see last week it dropped a lot, all right? But if you look at the quarterly as well as the monthly, it's still improving. Okay, but again, pound and euro, even though you can see that euro very strong or improving, you need to take into account sentiment as well. All right, so this is just fundamental. Don't just trade based on this. This gives you an idea of the economic data, whether it's improving or drop. Okay. Then the next thing you want to look out for is the weekly directional bias. All right, this weekly directional bias, I already include the sentiment analysis to it. All right, so that's why you see euro over here straight away. Direction bias for the week is bearish. Right, even though you look at this, the economic data is positive, right? But direction bias is bearish because the sentiment for euro and pound is very bearish, right? And I wrote here, while fundamental data continue to show improvement and strength, we remain bearish because of the current sentiment after Brexit. All right. So with UK exiting the Eurozone, many other countries are also thinking, can they achieve independence and such? So there's a lot of uncertainty in the euro. And that will definitely affect the sentiment of euro. All right, so that's why we are bearish on euro. We are also bearish on pound. This week focus is really on the pound. So later I'll walk you through more in depth once we go into the charts itself. All right, but pound we are bearish on it because there's a potential expectation of BOE stimulating the economy by cutting rates or even introducing QE. All right, so they might print more money to actually provide liquidity in their economy to sustain, after exiting from the euro. For Japanese yen, we are slightly bullish, but with today morning news, all right, this might shift a little bit towards either neutral or even slightly bearish. All right, so let me walk you through why we said over the weekend we said it's bullish is because the fundamentals, though is weak, all right, and there's this potential of BOJ intervening to weaken the yen, all right, because yen has strengthened a lot for the past month, and this actually hurt Japan export, all right. So the BOJ doesn't want it; they want a weak yen, all right, because it helps their trade balance, it helps their export to actually boost back the economy, all right. So the Japanese yen strengthening is not good for Japan. But what I want to share is because of the uncertainty experienced in the financial market, right? This is because of Brexit, and also from COT report, we are seeing that there are certain signs of strength for Japanese yen, right? But I said that this bias have perhaps shift slightly towards either neutral or slightly bearish, is because this morning Abe actually came in and talk about how they will seriously consider the stimulus package, all right? And highly likely they might act on it, all right? So because of that, the sentiment of Japanese yen from bullish will start to shift towards bearish, all right? So if you are looking at a chart on Japanese yen, you will see that a lot of the Japanese yens are actually rallying. That means yen is already weakening. All right, so it's important to keep yourself updated as to what's happening in the financial market as well. All right, so this one has already changed to either neutral or even slightly bearish. But having said that, no worries, because we are aware of this, and when we trade, we also would want to avoid a lot of all these Japanese yen. But there's one pair, the signals that we send out is actually pound yen. So later I'll walk you through more on that as well. Dollar itself, we are neutral, all right, because even though NFP for last Friday was very positive, but the average hourly earnings actually came in missing the expectation, all right? So the expectation for average hourly earning is 0.2%, but the actual one released was 0.1. And this is actually a drop from the previous last month data as well. So this shows that, average hourly earning actually is part of inflation economic indicator. And inflation is one key concern for the Fed, all right? Yellen is looking at inflation very closely. And because of this, all right, it missed the expectation. It actually further reduced the chance that Yellen will raise interest rate in 2016. Right, so that gives a very tough decision for her as well, because at a certain point, labor market NFP is improving, but yet people are actually not earning as much and thus not spending as much. Therefore, inflation wouldn't be hitting the target that they really want. So that's why this might delay the Fed from increasing their interest rate back in 2016. So this gives us a direction bias of neutral on the dollar. But the key focus for this week will be on Friday. We have core CPI as well as CPI coming in for the US dollar. All right, CPI is consumer price index. That's another indicator for inflation. So if that data comes in positive, this directional bias might shift towards being slightly bullish. All right. But that's on Friday, so you still have some time to actually keep an eye on how the dollar will perform from now until Friday. All right, if you look at Aussie, Kiwi, and Canadian, these three are commodities currency. We are slightly bullish as well as bullish towards all these three currencies. The main reason for this is because of risk-on environment. Right, investors and traders are having a higher risk appetite. They're looking for higher yield currencies. All right, and Aussie and Kiwi will be the two most favored out of the three. And between Aussie and New Zealand, New Zealand will be the one that is more popular, all right, right now. So if you look at the reason that we write in, all right, fundamentally, Aussie is still weak, all right, but the risk appetite picking up, and we are also seeing demand coming in for higher yields because of risk-on environment. COT is also showing signs that the demand is coming in. Right, the only concern here is whether RBA will now consider cutting rates after the drop in the S&P rating. All right, so last week, if you follow the news, S&P actually dropped the Australian government bonds from stable, right, the position of stable towards a negative comment. So that's something that might concern the RBA, all right, and they might consider cutting interest rates soon. All right, so that's something that you want to be concerned. But if you want to choose between Aussie and Kiwi, Kiwi will be a much better option. All right, because the whole idea here is last week, all right, we have S&P talking about Aussie. At the other hand, we have the RBNZ coming out and say that they will not be cutting rates in the near future. All right, so that gives the extra boost towards Kiwi. So that's why we are bullish. We are more bullish on Kiwi than the other two. Right, Canadian data is mixed for last week, but if you look at COT, it's showing you a clear sign that demand is coming in, together with a positive kind of risk environment. So this actually gives Canadian a slight boost as well. But the recent decline in oil prices is a concern, all right, if you want to buy into Canadian. So the best thing to do is, out of these three currencies, all right, focus on New Zealand, all right, as part of the risk-on environment kind of setup. Okay, so for this week itself, the news that is important is Euro. We have a final CPI, all right. We don't expect this to be a market mover, but just keep an eye on it. Pound is the one that's really interesting this week, right? Because we have monetary policy statement and bank rate. People are pricing in the expectation that BOE will cut its interest rate, right, because of Brexit, to stimulate the economy and everything. So this is something which you need to be concerned also, because if the cut rate is actually what we predicted, or what we anticipated, is really that BOE cuts rates, all right, and then it becomes bearish for the pound, etc. But because a lot of people are anticipating and expecting BOE to cut rate, you need to be cautious if BOE don't cut rate this time around. Because if they don't cut rate, the whole expectation is being shifted. We might really see a rally on pound. All right, so later on I'll share with you why certain setups you want to avoid taking. All right, and focus on some of the setups. All right, mainly the breakout setups you want to focus on. Those pending limit orders, structural trades, you might want to be very cautious. All right, avoid them, or even if you really want to take some, do reduce your risk on it. All right, Aussie itself, the key data coming in is employment change and unemployment rate. All right, this will definitely affect the Aussie, especially after S&P gave them a kind of rating as well. All right, and Canadian, we also have their rate statement and overnight rate. All right, so Canadian, we don't expect them to cut interest rate, but depending on their tone, it might play out very differently for Canadian. All right, but the focus here, it won't be Canadian, but really on pound. All right, so let me walk you through the charts itself. All right, before we go there, just quickly, all right, when is it going to happen? All right, Wednesday night is where your Canadian interest rate rate statement will come in. All right, rate statement as well, the overnight rate. But the key focus for this week is really on Thursday, where UK will have their official rate as well as monetary policy statement. All right, so you can see the previous interest rate is 0.5. A lot of people are expecting them to cut it down by 25 basis points. All right, so if they cut, it meets the expectation. But if they don't cut, there will be a misalignment of expectations, and that will cause some bullishness. All right, a short-term bullishness in terms of the pound. All right, so let's go over the chart. Then I'll explain to you why certain setups you do not want to take. All right, let's go through each pair again. For euro dollar, all right, again, our sentiment and our directional bias for euro is bearish. The reason is very simple. With Brexit, there will be a lot of uncertainty in the eurozone. This won't help the euro currency. All right, that's why we are looking for opportunities to short the euro. All right, so this pattern is a sharp pattern. It's a pretty new pattern that we are also exploring. So once again, there's no 100% kind of methodology or strategy, but as long as you manage your risk well with a healthy risk to reward, you actually can be profitable, all right, over a period of time. That's the key thing that you want to achieve. So this one, I wouldn't go much in depth for this particular setup because this pattern is very new. We are still doing some kind of testing onto it. So once it's firm up, again, we'll share more how you actually can identify sharp pattern. Okay, but let's focus a lot on the pound. The first one I want to walk you through is pound dollar, all right? If you look at this, all right, we do have two kinds of setup. One is the structural trade, all right? You can see you have a high here, a low, all right, a lower high and a lower low. So technically you have 1, 2, 3, 4 already. And if you pull in your Fibonacci from your third point to your fourth point, you can see there's also a confluence of 61.8 retracement level, all right, coming in at the previous structural resistance. All right, so just now I say best is not to use pending order, all right, like this, structural pending orders. The reason is very simple, all right? For example, now price is trading here, all right, and we know that Thursday there will be a bank rate, or a BOE bank rate statement. So if they cut rate, what will happen is price will eventually collapse down, all right? So it might not go up to hit your entry, but it might straight away collapse down, right? So then your pending orders won't be triggered. It's okay, it's fine. Okay, but the second scenario is that if BOE doesn't cut rate, all right, if they don't cut rate, there will be a misalign of expectation. Okay, so the price of pound will definitely rally because a lot of people are pricing in that they will cut rate. So if they do the opposite, right, people will get out of the trades and everything. So price of pound will definitely rally. And during that point of time, right, the short-term rally, you wouldn't want to have a short position here, right? Because you can easily stop out, right? Because price goes higher, and then eventually it will come back down. So the whole idea here is we want to take trades that favor us in terms of the different scenario. Okay, so for this kind of thought process, right, I want to walk through together with you so that you can also develop this kind of thinking process when you approach the market to trade. right? Always come from, okay, if scenario 1 happened, is it in favor for me? And then when scenario 2 happened, is it in favor for me, right? So you keep thinking on different kinds of scenario planning, okay, as a trader, and you can prepare yourself for that. So you won't be, you know, reactive, or you won't feel, you know, worried about it when that scenario play out, because you already planned. If this happened, what am I going to do? If that happened, what am I going to do? Okay, so for this kind of setup, all right, we ourselves won't take it, all right, but we send it out as a signal. So I just want to share with you guys who are part of our community, in the students community, is that you need to understand the top flow as a trader. So I would encourage or recommend you guys to not put all this, especially for pound, okay, not to put a pending limit order. Okay, instead, how then can you take opportunity of the pound should BOE cut rate, right? So if they really cut rate, what you can do is you trade the breakout. All right, so for some of you guys who are familiar, and we went through how to trade the breakout, okay, let me walk you through again. So for breakout, right, what you see here is you already have a daily fractal form. Okay, when this daily fractal form, you know that this is actually one of the low point that has been formed recently. Okay, so what you want to do is you want to take this low point and match it with the previous high. Okay, so this is the previous high that you see. You just need to use your Fibonacci tool, pull from the previous low to the most recent low, okay, to the previous high. Okay, so your Fibonacci level will be, at the bottom will be 100, at the top will be 0. Okay, so for breakout strategy, right, what we want to do is we simply wait at this level, at the 100, and we wait for price to break below this 100 level. Okay, let me draw in the horizontal line. We wait for price to come down and break below this level, and once price break below that level, we will be interested to enter a trade, right, following the overall trend, which is bearish. All right, fundamentally it's bearish, sentiment is bearish. When technical analysis come in and it breaks the previous low, okay, it's in a downtrend. So all this align together, we want to take the breakout trade. So for breakout trade, all right, how we put our entry, for example, over here, this low, the price is 1.2795. All right, I round out a little bit to make it nicer. 1.2795. For entry, we want to make sure that it breaks convincingly. So we want to minus away 5 pips, and our entry will be at 1.279. Right, so if you refer to the signals that we send out, it's actually entry point is at 1.279. Okay, so that's where we're going to enter. When price break, all right, we put a sell stop order. Okay, so it's a pending sell stop order. When price break, it automatically triggers our entry. Okay, our stop loss, we put it slightly above the 88.6 Fibonacci level. Okay, so the price here is at 1.2878. I'll round up, or you know, I'll be very conservative in my stops. I'll actually round down a little bit, or even possible round up, okay, to 1.288. Okay, so if it's 1.288, we want to add a buffer of 25 pips. All right, so that will become 1.2905. Okay, so that will be your stop loss. Okay, again, I repeat, the stop loss is at the 88 Fibonacci level. You add in a 25 pips buffer for the buffer. Okay, TP wise, TP1 will be at 127, and TP2 will be at 1618. Okay, so if you look at the risk to reward, even if you just take TP1, you will definitely have a risk to reward of more than 1:1. All right, so it's a healthy risk to reward. Okay, so this is a very mechanical and objective way of setting up a breakout strategy. And if you look at a lot of pound pairs, we do have a lot of breakout strategies happening right now. Okay, so I'll walk you through with some of them again, so you get to see how I set up a breakout strategies again. Okay, dollar yen, you can see, you know, yen weakened today, right? And that's why dollar yen rallied. Again, there's no valid setup that we want to take for this pair itself. Aussie dollar, Kiwi dollar, you can see overall it has been rallying because of the risk appetite coming in. Okay, but if you look at the technical, there's actually no setup. Okay, because Aussie, we are slightly bullish. dollar, we are neutral. We're actually looking to buy, all right? But right now, there's no buy setting up over here. Okay, so we do not want to trade it. Similar for this one, there's no buy setup technical wise, so we also want to skip this pack. All right, dollar CAD basically tricky because Canadian really need to wait for the the BOC rate statement to come out, because we can't really anticipate. All right, the word is anticipate. We can't really anticipate what kind of tone they will come out because of the economic data coming in is mixed. Okay, so there's no bias that we can clearly project. So that's why we also do not want to take the Canadian trade. All right, so this one we want to skip. Again, euro yen, all the yen pairs we generally doesn't want to take it. Right, though euro yen, euro our directional bias is bearish. Yen right now we have shift towards neutral. So best is not to just take this, but the better opportunity is actually on pound yen. All right, why pound yen is because of we are riding on BOE rate statement this Thursday. Okay, again, you can see that pound yen, we have a structure set up, all right? 1, 2, 3, 4. But then again, I would say best is not to take this kind of setup because we never know what BOE will do, right? Instead, right, I'll delete all this. Instead, take the breakout strategy, right? So again, you have a daily fractal here, a low, right, and a previous high. So what you need to do is you just take Fibonacci tool, draw from the low, the recent low to the previous high. Okay, you can see 100% is at the bottom. Okay, so that's where we're going to put our entry, our pending sell stop. Okay, so 100 level here is 128.75. I'm going to minus 5 pips, and I'll put my entry pending sell stop at 128.7. All right, stop loss is at the 88th Fibonacci level, and then I plus 25 pip buffer. Okay, so over here is 129.9. If I add in about 25, that will be 130.15. All right, so that's my stop loss. TP, take profit, TP1 is at 127, and TP2 will be at 1618. Right, again, you look at the risk to reward, it's already definitely more than 1:1. So it's a healthy risk to reward. Right, so scenario planning is that if BOE doesn't cut rate, all right, pound will strengthen, you go up, it doesn't affect us, all right, we are safe, our money is safe. But if BOE cut rate, high chance is that pound will weaken a lot, and when it drops, that's where we want to enter. Okay, so that's the top flow, and that's the scenario planning of a breakout strategy. Okay, very slightly different from the structural trade, all right? Because structural trade, we are trading the retracement. We enter when price retrace. But as of now, because of the second scenario, which is if BOE doesn't cut rate, price will rally. We do not want to be involved in that trade when BOE doesn't cut rate. Okay, Aussie yen you can see is rallying again. Kiwi yen is rallying as well. CAD yen, again, we want to avoid Canadian. We want to avoid yen. Again, this pair best is not to trade it. All right, Euro pound, again, this is similar to all pound setups. All right, you have a structural setup. All right, you can see that 1, 2, 3, 4. All right, price has broken above the previous structure. And if it comes down, there's a confluence of Fibonacci and structural level. All right, but again, we do not want to take pending trades. So this one, again, similar. We are taking the breakout. All right, you have a high, you have a previous low. All right, you draw in the Fibonacci from your previous high over here. You draw and drag towards your previous low. Then you have your 100 at the top. So our entry will be if price breaks above this high. All right, so this level is 0.8625. I'll add in another 5 pips. I will only enter at 0.863. All right, so I'll put a pending buy stop over there. Okay, stop loss will be at the 88, minus away 25 pip buffer. Take profit will be at 127 and 1618. Okay, so this is a very mechanical way of setting up a breakout strategy, all right? The whole idea why we want to make it very mechanical and objective is so that we won't be, we won't have subjective element in it, like sometimes we take this, sometimes we don't take that. is not going to help you in your trading plan, right? Because you can't measure it properly, you don't have the proper statistics, you can't make a conclusive conclusion as to whether this strategy makes money or not. Right, so whenever we do out a trade plan, we want to be as objective as possible. Okay, Euro Kiwi, this one, okay, Euro we are bearish, Kiwi we are bullish. All right, so the best one is to short this, sell this pair. Right, and it's pretty clear cut in terms of the directional bias for this currency pair. As of this, if you look at H4, it's going down very clearly. It's in the downtrend technically as well. We do have 1, 2, 3, 4. All right, a structural setup. All right, and if I pull in Fibonacci 2, you can see it confluence very nicely, right? Between a Fibonacci 618 retracement and your previous structure level. All right, so this one, we do put a structure pending sell limit. Right, so if price comes up towards this 61.8 retracement level, we'll enter. All right, so a quick recap as to 1, 2, 3, 4 how we set up. The first thing is you want to have Fibonacci level confluence with your previous structure level. That's where you put your entry point. And stop loss, if it's entering at 61.8 Fibonacci, all right, your stop loss will be at the 786 plus the buffer. All right, TP1 will be at the 0. And TP2 will be at the 127. All right, so you need to pull in your extension, and TP2 will be at the 127 extension. Okay, so again, recap structural trade. You can see the risk here, the reward is this. All right, so it's again definitely more than 1:1. It's a very healthy risk to reward ratio. Okay, and for those who wants to trade a breakout for this pair, you can do that as well. All right, why? Is because fundamental, the directional bias is clear, is down. Technical wise, we can also see that it's moving down very nicely. All right, what we identify is that we have this low over here and the previous high is here. So what we do is we drag from Fibonacci from a previous low to the previous high. You can see that this is 100 at the bottom. So we are interested if price break below this 100. Right, so we are interested to enter if price breaks below this. So what we do is we put a pending sell stop. Okay, stop loss again at the 88 Fibonacci level plus buffer. TP1 is at 127, TP2 is 1618. Right, so again, very simple kind of technical approach towards a strategy, but most important is how we combine our directional bias, right, to give us that conviction to enter a trade. Euro Odd, we won't be taking it because, as I mentioned just now when we went through the weekly directional bias, we want to focus and take our trades on Kiwi instead of Aussie. Okay, so we skip this. Similar for Pound Aussie, there's nothing setting up over here. Pound Kiwi, nothing much as well. Aussie Canadian, nothing much as well. Pound Chef, Pound Franc, very similar. There's a structured trade as well as a breakout trade. We'll avoid the structured trade, but only take the breakout strategy one. Right, the reason is all the same for Pound. We just want to take the breakout. All right, so okay, so that's the gist for the focus for this week itself. All right, really focusing on Pound trades. All right, a lot of our setups are on Pound trades. So far for you guys here, any questions? All right, let me check if you guys have any questions. Okay, so John asked, why do we still need FSI when we have the weekly directional bias? Okay, let me tackle that question. All right, let me show you how FSI works. All right, on the chart. All right, so let me pull this out. Okay, so this one we didn't during the workshop. All right, we didn't really walk through with the participants how we use this. All right, but this video, let me explain to you what FSI means, what is the back end, how we actually come up with this indicator in order to make things easier for everyone who's trading the fundamental economic data. All right, so FSI in long, it means Fundamental Strength Index. All right, so the whole name Fundamental Strength Index, actually we pull data coming in from Fundamental Strength Table. All right, so what is Fundamental Strength Table? If you forgot, let me go back. All right, this is the Fundamental Strength Table, Fundamental Strength Index, FSI. So again, we are only for FSI indicator, we are only pulling in information related to economic data. All right, so economic data only, we don't take into the sentiment aspect of the currency market. Okay, so if I go back to my chart, all right, what you see over here, right, this is Aussie Yen pair, all right, on the daily time frame. All right, if you want to check FSI, we only check it on the daily time frame. So what is the the green and the purple line? What is it telling you is that we are mapping the fundamental economic data of Japan as well as Australia, because it's Aussie Yen, right? So we map Australia economic plus Japanese economic data together, and then we put it on the price chart, which is this one, to see if there's any difference between the fundamental strength of this currency pair and where the current price is. Okay, so that gives us a difference. So you can see that fundamental strength of Aussie Yen is actually over here, right? That means, right, if those who does investing, we call this intrinsic value, right, or what we call the fair value. So if you look at this, the fair value of this currency pair is actually at 81.65. All right, if you follow this FSI indicator, it will be at 81.65, but the current price is at 77.5. So what you need to do is it tells you that there's a chance that you can actually write this pair up towards the 81.85 level. Right. So what I want to show you is that this gives you a quick idea as to whether there's a difference between where the fundamental strength index is and current price. Okay, so if I scroll through some of the charts, you can see euro dollar, right? The fundamental value is actually on top, but current price is here. But why we don't want to look to buy euro dollar is because the sentiment doesn't align with it. All right, the sentiment of euro is bearish, so it doesn't align because FSI only take into the economic indicators. Right, so we do not want to trade this. All right, similarly, if we look at dollar yen, all right, we are seeing that FSI is in between price, so it's so-called a fair value. All right, price currently is fair value. And if you look at Aussie dollar, you can see that last few weeks, all right, actually past 2 weeks, all right, you can see that price is actually below FSI, and eventually price came back, all right, to touch the fundamental value, the intrinsic and the fair value as well. All right, so the whole idea of this is giving you this indicator is giving you a quick idea, a quick glance as to whether current price is at a fair value. If it's not at a fair value, it gives you an idea that, okay, there's a chance that I can actually leverage on this opportunity on the difference to make some profit, right? So if you continue scrolling, you can see euro pound, all right, there's a huge gap. But again, because this doesn't take into account sentiment, euro pound, we wouldn't want to take this trade. Okay, again, New Zealand dollar, you can see over here, there's a difference, but because of sentiment, now it's risk on. Kiwi is bullish because of that as well. We wouldn't want to take this trade. All right, US Canadian. Okay, this perhaps is a potential, right? A quick one that you can see. All right, so when you can see that this FSI actually act as if it's like an indicator that deals similar to your moving average, right? Because it acts as if it's a mean reversion kind of strategy. That means every time it moves away from FSI, there'll be one point in time that they will come back and meet together. All right, EuroCAD, you can see, sometimes certain currency pairs is at its fair value, then we might want to avoid taking those currency pairs. All right, Euro Odd, again, you have an opportunity to take, but again, sentiment doesn't align, so we don't want to trade it. All right, New Zealand Canadian, it's not loading yet. You can see pound yen, again, there's a gap, but because of sentiment, we do not want to take it. Right, again, similarly on New Zealand yen, you can see that initially the last week price was below, and then eventually it meet up with FSI, the fair value. Right, so again, this indicator is not like, it's no indicator is there as a holy grail. All right, so this indicator is served to make things easier and quicker for traders like yourself. All right, but of course, if you ask me, when you have this report already, right, as a trader, you want to develop that skill set, right? Especially, I expect you guys to have that skill set to actually derive your own directional bias based on all this information that you have, all right, looking at COT as well, all right? So don't just rely on one single indicator. All right, John, did I answer that question? I think the whole idea of FSI indicator is there so that it makes things easier for people who doesn't really understand what fundamental is, understand what sentiment is. So it's like, you know, a convenience kind of indicator to give you a guidance. All right, so the whole idea is eventually you guys will also have access to that indicator, but I want to warn you guys that don't use it as the only thing that you look out for and then you just trade it like this, all right? You need to use it as a filter, but also enter with a proper technical analysis. For example, you must find, let's say, have a structural trade, then you only structural setup, then only you take that trade. And when there's a harmonic patterns or advanced price pattern, then only you take that trade. Got it? So don't just take trades blindly because, you know, for example, let's say, okay, there's this gap, and then straight away I decided I want to sell this pair. Okay, it doesn't work that way. Okay, so you need to use it just as a filter. Okay, so that's the gist about this FSI indicator. What we did back end is we just compute all the economic data that we get, you know, GDP, employment, NFP, average hourly earnings, CPI, everything. We put into Excel, we run an economic model, and then we come up with all this data. All right, moving forward, we also be, once we establish the FSI indicator, we also be doing one for COT, right? So eventually we also have a COT indicator to track sentiment, all right? So it's just to make things more convenient and easier for traders outside. Okay, but we do expect you guys to actually develop the skill set such that you don't need to rely on an indicator, because if one day, you know, you lost your indicator, or you transfer to another computer that doesn't have the indicators, I do not want you guys to be stunned or paralyzed. That means without the indicator, you can't trade, right? Because the whole idea about a trader is that you do not rely on anything, but really just on your personal skill set, all right? So if I strip away all your indicators, you should still be able to trade profitably, right? So that's the end goal that all of you should be aiming. Okay. Do not cut off your explanation in the recording. Yep. Yes, we will. I'll upload this fully on YouTube, and then I'll send you guys the link so you can access to this recording, John. No worries about that. Okay. Any other questions? All right. So basically, this week itself, the focus is really on pound. All right. But again, the focus on pound is trade the breakout strategy, all right? There's a reason why we have different technical methodologies, different technical strategies for you guys, is because during different market environment, for example, right now, different market scenario planning, you want to adopt very different kind of strategy to protect yourself, right? So for our philosophy, I want to emphasize again, it's always about capital preservation first, focus on risk management first, okay? It's okay to miss profitable opportunity, but it's not okay to risk your money without a proper plan. Okay, so the whole idea here is, yes, maybe if you put, let's say for example, this case study, this example of pound franc, okay, potentially this is what can happen, all right? Price goes up, it touch this level, and then nicely it reject and bounce back. Okay, and I tell you guys today that don't put pending, don't trade the structural trades and such. Yes, maybe I might be wrong that price really retrace, and then after it touch this level, come all the way down. Okay, so we might miss opportunities like this, but for us, it's okay because we know that our intention going into this trade is actually to protect ourselves first. Okay, so that's our style. But of course, I understand that perhaps some of you are a little bit more aggressive. You can do that as well. Right, but my suggestion to you is do not risk too much on all this. All right, and you want to know that. Right, let me go back to this week technical analysis. You can see that this week itself, a lot of pound selling trade. Okay, pound dollar sell, pound franc sell, euro pound, this is buy, which is also selling pound. Pound franc, you're also selling it. Pound cat, you're also selling it. Okay, so again, this one we talk about it during our second day of the workshop, risk management aspect. You need to ensure that you are not overexposed on a single currency. Okay, so if you have £1, £2, 3, 4, 5. Okay, so if you have £5 setups, and then if all of it trigger and you risk 2% of it for each of these trade. Okay, if all of these 5 trades trigger, you have an exposure of 10% on pound. Okay, so you need to control this. Okay, are you comfortable with a 10% exposure on pound? If you're not, you need to cut it down. So maybe instead of 2% risk per trade, you cut it down to 1%. So if all 5 trigger, you only have 5% exposure on it. Okay, so this is very important because you need to really control your exposure when you trade so many currency pairs. Okay, that's one method. The other method you can do is instead of taking all, you might just want to pick a few. All right, so just now I mentioned you might want to avoid yen. All right, so you might want to avoid yen. You might want to avoid Canadian. All right, so maybe you want to focus on taking pound dollar or even pound franc. Okay, but then there's no like confirm if you take pound dollar, pound yen, then it'll be the most profitable tool. All right, but this is something that is really depending on your risk appetite. Okay, so for us, very simple. If there's so many setups like this, we cut our risk to half. Okay, so if we risk 2% per trade, for now we risk 1% per trade. If we risk 1.5, then we risk 0.7 for each trade right now. Okay, so that's how we do it. That's for you to go and figure out also in your trade plan whether you want to do this like this, meaning cut half of your risk, or you want to just select a few pairs to trade and ignore the rest. All right, so this is really something that you as an individual you should go and do it. Okay, any more questions that you want to walk through and such? Okay, so we have a few of you guys here. Let me check my calendar. Okay, for John, John and Jess, all right. This Friday we'll be meeting, right? For the rest, if you guys are interested to do a consultation, all right. Friday we are opening up for coaching. Wednesday I'm not free, so this week we'll be changing it to Friday. All right. Let's do 7 p.m. onwards. All right. So for those who are keen to meet up for consultation, all right, do meet me. Do let me know. All right. This Friday 7 p.m. We can meet at City Hub. All right. So for John and Jess, I hope you did your exercise, your assignment, your homework that I gave you 1 month ago, because we'll be actually going through from there and progressing from there. Okay, so for the rest, who wants to join in, do let me know. Just drop me a text that you'll be coming, and then I can plan the time to actually do up the consultation with you guys. Okay. Any other questions? Okay, if no questions, we'll end here. All right. Just to share with you a little bit. For those who are interested, all right. Especially like Florence. I'm not sure. Chuan, all right. I think you're also in this group, in this webinar. Chuan, Florence, if you guys missed last Saturday the fundamental and sentiment workshop, right? Feel free to join us. Next one is actually on the 23rd. All right, 23rd of July, all right, over here, which is Saturday, right? So it'll be at the same timing, around 10 o'clock to 6 o'clock. John and Jess as well as Z, if you guys do want to join in, feel free to do that. All right, because if you can't absorb everything on that day, you want another refreshment, let us know again. All right, we'll open up and let you guys sit in again. All right, and of course another thing for those who are familiar with OTCS, I'll be having a sharing session on the 20th. Right, I'll be talking about the fundamental outlook as well as the sentiment analysis for the currency market. During that session, there'll be other speakers talking about other topics as well. The whole idea, I think, is for OCTS to invite their members as well as some speakers to share with their members as to some of the outlook for the remaining of the year, and etc. Right. So if this one is organized by them, so if you're interested, you have to RSVP with them. If I'm not wrong, if you're not a member, you have to pay about $20 to sign up for the event, right? So if you guys are interested, you can also join in for that event, which is on the 20th of July. All right. So other than that, I would want to plan one day in this month, all right, to do a community meetup. All right. Our community meetup are normally not so intensive in terms of talking about trading, right? But it's more of like a chillax session where I want to just gather everyone to follow up with each other, get to know each other, to stay in contact, etc. This is the part where I talk about being a trading partner and such. So I want you guys to eventually develop towards a certain stage where you actually find a trading partner within this community as well, right? That is actually for your own benefit as well, because I know the power of trading partner, especially when I work with Lester, I work with JT. Right, so I want you guys to also experience that power of having a trading partner. If it's not one person, it can be a community, it can be even a small group. Right, so that's the whole purpose of having a community like this also. So I will arrange a time, all right, in this month itself. Most likely it'll be on weekdays, right? Because weekends, most of our time are actually packed for workshop. All right, so weekdays we do it in the evening. All right, we can meet up for dinner, and then after that we can maybe just find a coffee shop or something to sit down and just chit chat and follow up from each other. All right, so other than that, that's about it that I want to share with you for this week. All right, the focus here again, I repeat and summarize, is on pound. Focus on the breakout strategy that I share with you. All right, and do monitor the market closely, because this week focus will be on BOE bank interest rate, and then Friday will be on US core consumer price index, the CPI itself, the core CPI. All right, so other than that, for Jess and John, I'm not sure if you've done your homework, but we'll follow up with you on Friday. Let me know if you can make it, because the time we did plan and put in my calendar is on Friday. The rest, if you want, do let me know early. All right, we are opening up on 7 p.m. until maybe 10 p.m. on Friday evening. Yes, so that's about it. Any other questions? Last questions? If not, I will end these sessions over here. Okay, if no session, no questions, I'll actually see you guys, for those who are coming, on Friday, and the rest I'll actually see you on next week during the webinar itself. All right, and of course, if you are coming for OTCS and the 23rd, then I'll see you then as well. All right, so with that, have a good week ahead. Trade with proper risk management, and if you have any other questions, just feel free to WhatsApp or drop me any message on Facebook or inside the group itself. Okay, so with that, I'll see you guys. Bye-bye.